So welcome to another week of Lunch Money. For all those that are new to Lunch Money, we do these every Thursday at lunchtime. And they're also available as a podcast on Spotify, Apple Podcasts, or Google Podcasts. This week, we are going to be joined by Victoria Harris, which is super exciting. But before we get into that, just like to introduce myself. I'm Lauren Croft. I'm a product owner at Sharesies, and I look after our scale portfolio of works, which includes corporate actions and our partnership in the US. It's a very exciting space to work in. And I'll hand over to Alice.
Cool. So kia ora everyone. My name is Alice and I'm a financial analyst here at Sharesies. So I sit in the investments team and support with investing or financial knowledge wherever is needed.
Oh, fantastic. So before we get into it, just a little bit of housekeeping. So just a reminder, if you have any questions for us, you can submit them through the Ask a Question button below, which is just to the left of the chat. Don't leave questions in the discussion thread area, as we're likely to miss those. Please be kind and respectful towards our speakers and your fellow viewers. Otherwise, we will have to take steps to remove you from the webinar. And the last but not least, we have a bit of a legal disclaimer. We won't give any personalised financial advice. Investing involves risk. You aren't guaranteed to make money and you might lose that money you start with. We don't provide personal advice or recommendations, and any information we provide is general and only current at the time. So without further ado, today we are going to be joined by Victoria Harris. She's a portfolio manager at Devon Funds Management and founder of The Curve. So Victoria has over 10 years of experience in the investment industry with a current, and as I mentioned before, is currently a portfolio manager at Devon Funds Management and has previously held roles at Pi Funds Management and Milford Asset Management. Last year, Victoria also launched The Curve, which is an educational platform providing information on investing and financial advice for women. So welcome, Victoria.
Guys, how are you? Hi, how are you?
Hi, we're good. We're good.
Thanks for having me.
Yeah, it's so great to have you here with us today. We're really excited. Alice,
Awesome.
Would you like to kick it off?
Yes. Yeah. So Victoria, super excited to have you here on Lunch Money today. I'm really keen to hear your thoughts and discussions, but I thought we could just kick things off by you introducing yourself and telling us a little bit about yourself and just your story.
Yeah, sure. Yeah, you did an amazing introduction on me, so there's not much more to say. But no, I guess my background. So yeah, like Lauren said, I've been in the industry in the finance industry for about 10 years now. I graduated and went straight into an analyst role at Milford Asset Management, analysing companies to invest in, and then moved on to Pi Funds as a portfolio manager, and now I'm employed by Devon Funds as portfolio manager as well. And then I guess throughout that kind of period, that 10-year period, I kept getting approached by friends and family, specifically women, just being like, Vic, can I sit down with you for 5 minutes? I've just got a few questions about investing, or I've got a bit of money now and I don't know what to do with it. And while I couldn't give advice, it was more just educating them about little things around investing. And it kind of there was so many people asking me, and then I thought, hang on a sec, if there's this many people, and particularly women in my friendship group, there must be a whole lot of women out there feeling exactly the same. So we set up The Curve last year while I was in between jobs, and it's gone from strength to strength, and we're pretty kind of overwhelmed at the response that we've had, the community that we've built in such a short space of time.
I definitely follow you guys on Instagram. It's great.
Great, yay.
Yeah, that's awesome. And obviously all about financial empowerment and education here at Sharesies as well.
Totally, yeah.
I'd love to see more stuff in this space. So firstly, if we just touch on kind of your role as a portfolio manager and working in that funds management space. So Devon Funds is a fund manager. Perhaps for someone who might be listening who doesn't quite know what a fund manager is, can you just explain what that is?
Yeah, sure. So you're effectively pooling together investments, whether it's from mum and dad investors, which is what we call retail investors, or institutional investors, which is you're managing money on behalf of banks or institutions like universities, and you're effectively pooling those funds together and investing them as a fund. So you would invest in a fund, whether it's like some fund managers have 3 to 6 different funds that you can invest in, depending on different risk appetites. And some might be only investing in Australia, some might be only investing in New Zealand, some might be global funds. So they'll have a range of funds catering to their customers or to their investors. And so my job is that I manage, as a portfolio manager, I manage a fund, which is a pooled investment of can be hundreds of investors sometimes, and you're investing on behalf of them and making those investment decisions and investing in. At Devon, we only do equities, but you can invest in lots of different asset classes, but you're making investment decisions on behalf of your clients, and you're growing that fund, and in turn that grows each individual investment. So when and there's this really great structure in New Zealand called a PI fund, and not to be confused with PI Funds Management, but it's a PI fund is a portfolio investment entity, and it's just a really efficient way of investing. And it means that you buy a unit, and that unit price changes depending on the underlying value of the fund. So instead of owning 10 shares in Apple, or for example, you'd own units, and those units are invested in Apple, for example. So, and it's efficient because you don't have to, it's all taxed at the fund level and everything. They've done a good job of kind of making investing in funds a lot easier for everyone. So yeah, so it's really just a pooling of funds and investing it on your behalf. Yeah.
That's a really good description, and I don't think I've ever heard the terms retail investor and wholesale investor like split down and explained so clearly before as well. So I'm sure there's people out there who are really appreciating that too. Yeah. And you touched on a bit about what you do as a portfolio manager. What portfolios do you manage at Devon, and are you allowed to say what kind of amount of money that is, and what do you kind of do on your day-to-day to manage that portfolio?
Yeah, so I manage a pure Australian fund. So that invests in, it's 100% in Australian equities or Australian stocks. And then I also manage a sustainability fund, which is trans-Tasman based. So it invests in Australia and New Zealand companies. But it's got an additional overlay whereby all the companies it invests in have a positive impact on the environment in terms of low carbon emissions. And it also has some screens that we can't invest in. So for example, we can't invest in gambling, alcohol, tobacco manufacturing. There's a whole raft of kind of what you'd call ethical or sustainable screens. And then I guess my day-to-day job is, so I get to work, and every day is different. There's lots of, I guess to sum it up, part of it is managing the current portfolio and the companies that we've already invested in, and then the other part is trying to find new ideas. So people get the misconception that there's a lot of screen time and a lot of sitting behind a desk and looking at spreadsheets when you're working in finance and investing. And there is an element of that, but there's also a lot of my job is out and about, meeting new companies, talking to existing companies we invest in to see if anything's changed and whether we want to buy more or sell more. And there's a lot of reading the news, reading annual reports. We read the news just to see, is there anything that's going to impact the portfolio or any of the companies we invest in? Is there a competitor that's announced a really good new product that could mean that the company we invest in isn't going to do so well? All those kind of things, whether it be macroeconomic news or company-specific news. And then we might get in touch with the company and see their version of events. And then, so it's a lot of, every day is different. And then the market opens here in New Zealand at 10 a.m. There might be an announcement from a company that we own. And we've got to kind of quickly decipher that information and figure out what we want to do with our position. And you really never know what announcements are going to come. Yeah. What are going to appear for the day. So you could have none, you could have heaps at once, and it's like a really hectic morning. And then we've got Australian market that opens at midday our time. So it's kind of just constant news flow and kind of pivoting and figuring out what to do, as well as trying to find kind of new ideas. So, but my focus is generally more on Australian companies at the moment, just because that's where the majority of the money that I manage is based. So, yeah.
It's real finger on the pulse sort of stuff.
Yeah.
And I guess, so quite a large part of your job is at monitoring your current investments, but then also, as you said, picking what things to invest in. So how do you go about doing that? Like, can you talk us through that process?
Yeah, so it's kind of a lot of the news reading and stuff, for example, is also kind of trying to spot new trends or new investment ideas, and that's or a company that has had a bad run and things are improving, or for the likes of COVID's a good example. We're looking at investing in a whole lot of what we call recovery stocks at the moment. So companies that may have been quite beaten up or not done well during COVID because of the lockdowns or the lack of travel, and now things are improving. We're getting vaccinations, and it's assessing, okay, well, which companies are going to come out better off, because we're always forward looking with markets. So we're always looking, 12 months and ahead. So it's thinking, what does this company look like in 12 months, 24 months, and beyond. And so it's constantly trying to spot trends. It's the kind of thing I tell people when people are like, oh, where should I start investing, or what should I invest in? And I just say, look around you. It's you'd be surprised how many listed companies you actually use, like products that you use on a day-to-day basis. And I'm on my Surface at the moment, which is Microsoft, my phone, there's so many things that you use day to day. And I think if you start using a new product that you like, or a new piece of software or something, then it's thinking, well, if I'm using this and I'm finding it really good, surely a whole lot of other people are. Therefore, I should be looking to see if we can invest in that company. And I find it hard sometimes to switch off when I'm going about my day, kind of stop looking for investing trends. But yeah, it's just kind of, like you said, having your finger on the pulse and just having your eyes open a bit in terms of thinking about whether this is going to be a big trend, and how we get access to that in terms of investing our clients' money.
That's so interesting, and such a relevant point around, if you're not sure quite where to start, we'll just look around you and see, what companies do you engage with, and go from there. Yeah, really.
And it's also about not having too much in one theme or trend either. But that's also, it comes down to risk management and diversifying. You don't want to have say pre-COVID, and you don't want to have all your stocks in the travel sector, for example, or hotels, because then you would have been significantly impacted during COVID. And even though that industry might look better now, you still don't want to have all your eggs in that basket, because you don't know what's going to happen, and nobody could have picked COVID or a global pandemic. So it's just kind of, when we look at the portfolio, it's thinking, okay, how much do we have in the retail sector, how much do we have in the healthcare sector, and just making sure that we aren't kind of over-indexed or in one sector or trend or theme or country even, just kind of being aware of that.
Mm-hmm. Yeah. And so, you talked before about how you're always responding to things that's happening in the economy and the markets and all of this different news. How do you keep up to date with all of that and all of the research that's happening with your investments? That's something that like just astounds me is, there's so much news and I'm sure, say, Australian stocks, there's a couple of thousand on the ASX. How do you actually keep up to date with all of that?
Yeah, it's definitely just don't sleep. No, it can be tough sometimes. Sometimes there's news flow that you miss, but we do. It's having alerts on companies that you're specifically interested in or concerned about. It's reading news platforms that are going to move the market, or it's just kind of being efficient, I guess, because with research and researching companies, you could research all day, every day, and there's never. You could keep researching a company forever and a day, and you'd always find some kind of new piece of information to look at and read over. So it's just kind of knowing when you've done enough, I guess, and then just maintaining it. It's also being in touch with the companies themselves and building those relationships. So therefore, if they do have newsworthy information, they usually report it to the ASX, which goes out to everyone. But it's just, making sure that you're, in touch with them in case anything changes or, but yeah, we have a lot of alerts. We do rely on the brokers a lot as well. So the likes of, in New Zealand, we've got Jarden and Craig's Investment Partners are the two major ones, and we pay them when we trade. And within that fee that we pay them, they cover a lot of. They have analysts that cover a lot of companies that we invest in, and they have massive teams that are kind of all across this that would make sure that there's. We get emailed or called around any kind of market sensitive information, but yeah, it's very. Yeah, it's kind of just being efficient, I guess. And like I covered global markets actually, my previous role, and that was interesting because you'd be asleep when all these markets are open, and having to wake up and you've got a couple of hours before the US market shuts, and you're trying to decipher all this information. And it was a really intense way to wake up and start your day. But so it's great that we're in this time zone, so we get the news flow as soon as it happens, and we can make decisions. And we've got a team, and everyone's kind of allocated either sectors or regions, so there isn't information that kind of slips through the cracks or whatever. Well, we try to make sure that there's not. Yeah.
Yeah,
10 points for trying.
I was going to say, yeah, it's quite fascinating how, we wake up and the US markets have just shut, and everything's just hot off the press, and you can sometimes find that you wake up first thing and you're just bombarded with this share market news.
You wake up and its stock would be down 20% and you're like scrambling around trying to figure out why and should I sell, and it's just like, yeah, it's crazy. It's hard doing it from New Zealand, but there are some great global managers out there that do it, but I prefer to be awake when the market's open.
Well, now that you're looking after the Australian portfolio, the market timing's a bit nicer than
yes, definitely, yeah.
Awesome. So before we mentioned about the curve and how last year you launched this platform which aims to educate women on finance and investing, what you mentioned before about how you just had a lot of friends and family coming to you, which sort of inspired you to launch the platform. So what's your vision with it, and what are you aiming to do?
Yeah, well, so I guess that it's kind of why we started it was just the kind of the incoming women that were wanting information, but there was also another reason, and it was for me it was just the lack of females in the industry, and I've been seeing this my entire career, but it's also sitting there thinking, how can we get more girls into finance, and why was it never a career path that I considered at school, and that kind of thing. And I think that plays into it. It's educating women, but it's also getting women more interested at a younger age in investing. And then that kind of comes into our vision is that, well, we provide the education piece at the moment, and we're really building up that community and that trust and the reputation. We do get a lot of people that are like, great, that's awesome. I've learned what I need to learn. Now I want to take the next step. And that's where we send them off to Sharesies, or we give them, we kind of, it's kind of, you lose the relationship, and it's kind of figuring out what they want next. Is it advice? And we're really just kind of figuring out what's the next step for the curve. But I think curve 2.0, I would love to get into schools, and particularly girls' schools, and just tell them, the finance industry is awesome. It's really fun and dynamic, and it's not as scary as it seems. And you don't spend all your time sitting behind a desk building a spreadsheet. There's lots of fun parts of it too, and you get to meet a lot of companies, and just kind of tell them that it's an interesting industry, and just tell them why it's so important for women to be across this and be having investing conversations and that. So it's kind of we've grown so quickly that we kind of just keep playing catch up, and at some point we've got to sit back and go, okay, what's the plan here? Because it's very much just kind of keeping our head above water at the moment, and yeah, we kind of let our followers in our community dictate where that goes. We started with events and blogs, and then we just launched a podcast, and because that was an area that people wanted, a way of people wanting to listen to and digest information, and then we also started going into corporates, because we had a lot of people reach out saying, hey, I think you'd be really good to come and talk to our staff, and that was an angle we never even thought of. So the vision's kind of organic at the moment, and but ideally just like to get in front of as many women as possible. And if you can get, if every woman that you speak to or that comes to an event can get one tiny bit of information from the curve and make a difference for their future, I think that's amazing, and that's all we want. I've had friends and actually people that don't even know a message being like, hey Vic, came to your event, I changed my KiwiSaver, I can't believe I was on with this fund that was returning, it was such a low return, and now I'm in this fund, and it's kind of, you're like, yes, that's why we do it. And such a small change like that making a big change for that woman in the future is it gives us all the feels, kind of thing. Yeah.
Oh, cool.
Yeah, that's just awesome. Like, I think the more people you can educate on finance and investing and helping empower people with their finances, like the better, it's just creating a more financially empowered generation. And so you mentioned before that you talk about why it's important for more women to invest and learn about these types of things. So why is it?
Yeah, well, it's a good question. If I think about KiwiSaver and retirement, for example, so we all know that we get paid less on average than men. There's a gender pay gap. And then we most of us will take time out of the workforce to have a family or look after family. And then we tend to live longer. So we're contributing less. And then we take a break out from contributing at all sometimes. And then those contributions have to go further. Those retirement savings have to go further when we get to retirement because we live longer. So we get to retirement and we're in a worse position than men, and it has to last longer. And it's just, it's really important for us as a gender to make sure that we have the greatest pool of retirement savings when we get there, so that we have the lifestyle we want and we aren't worse off. Why should we be? it's when we can take small steps now, whether it be switching your KiwiSaver or increasing your contributions per month, or just making contributions to start with. Some people don't even make contributions, and it's just, if we can make those small changes now while we're still younger, then we have a 20, 30, 40 year time horizon to let those changes compound. And hopefully, if we've done everything that we possibly can, then hopefully we'll have a larger pool of retirement savings. But it's also important from a confidence point of view. I think historically men were the breadwinners. We didn't contribute financially to the household, so we never had these discussions and these investing discussions. And now that's turning, and we are earning and contributing and working, and yet we don't know how to invest, or we lack investing knowledge and confidence. And I think it's really important for women's confidence to be having those conversations and learning about investing. Like, I had a friend of mine, and she was like, "Oh, my dad always used to speak to my brothers about investing when we were younger, but never me." And it's just changing. I know, and it's just changing that mentality, and realizing that we're interested too, and we want to invest, and it's breaking down the barriers of it's not so scary. And the more we talk about it on platforms like this, the more people are willing to learn, and it becomes less intimidating. But a lot of women do almost feel too left behind now, which is not at all the case. Even if you're older and you've only, when we say 5-year time horizon for investing, so as long as you've got 5 years or more, you can start, even less if you want, but you can start your investing journey. And it's kind of just telling those women, it's never too late to start. And even though it may seem like a big mountain to climb, the sooner you start, the sooner that doesn't seem as big, if that makes sense. But I think because we've been left behind for so long, it's almost like I'll deal with that later. But every day that you don't do something is actually costing you money, because you're losing that potential gain or that potential return. So there's just so many reasons why investing is it's important for women in particular to learn about investing. I could go on and on about this topic. How long do we have?
Not too much longer, but I love that one. I've never thought about that. Like, every day you put it off further, because it can seem intimidating. It can seem like this massive mountain, but the best time to start is today. And the longer you wait, it's like starting a running race. The longer you stay on that start line, the further away that finishes. And I've never thought about that, like the every day you wait is that you're actually losing opportunity in that format before. Yeah. And that's what we try to tell people at our events and stuff, is kind of running scenarios. And it's like, Mary invests X and she gets Y. It's just kind of breaking it down of what you can do now. And there's actually a lot of KiwiSaver providers have really good investing calculators where you can punch in, okay, this is my salary, this is how much I'm contributing if I changed this, and it spits out. It has some pretty conservative assumptions for obvious reasons, but it spits out what you could have at retirement. And I think it's really good because it's like, okay, if I contribute an extra $50 each month, what impact does it have in the future? And then you can kind of, it quantifies it, and it's a really good way to put it in perspective of what a small change now can do in the future. So I think those kind of tools are really, really cool. That's a good point on KiwiSaver too, though, because I imagine a lot of people have KiwiSaver and don't think of themselves as an investor and investing for their future, when actually that's almost the first hurdle. Like, you're already an investor if you've got KiwiSaver. So it's like, cool, where to from there?
Yeah. And there's so many little changes you can make to your KiwiSaver that can make such a huge difference in the long term. And because it's locked in and you've got such a long time horizon, whatever changes you make are kind of multiplied and compounded over years and years and years. So it can be a huge benefit if you make those changes.
Yeah, those are some seriously important messages there. And that's such an interesting point that you raised before about the fact that with women, we do have a longer life expectancy, often take period time where we aren't in the workforce if women are, taking time out of work for childcare, and then the fact that that pay gap exists. And so, that you add all of those factors together. And so that's where the importance of starting early, thinking about these, having these discussions is so valuable.
Totally, yeah.
So if you, what would you say to women in New Zealand who might not think investing is for them?
I mean, that's fine. I mean, investing isn't for everyone. I think I would want to know that kind of why, but understand a bit more why that is, because it's probably because they're scared or it's intimidating, or like I said, it just seems like too much work or too big of a mountain to climb. But I think I'd just say it's not as scary as it seems, and great platforms like yourselves have made investing really accessible for the masses. So you don't have to have a lot of money to invest now, and I think that's great. You can invest with $5, you can invest with $50. You don't need $10,000 like you did historically. There's kind of investing's evolving and adapting and becoming much more mainstream, which is great. And I think it's just going to create more and more conversations around investing, and hopefully women in particular will realize that investing can be for them. And we bring a lot of different viewpoints to the table as well. Like when I was talking about investing trends and stuff like we have different ways of looking at things. So, for example, we can spot trends that our male counterparts can't spot, and they can be great investment ideas. Like I remember once at my previous employment, and there was one, it was a jewelry retailer, and I was kind of pounding the table. I'm like, this is going to be a great investment. I've been to the stores. Yeah. Everyone is like, there's just people packed in there. It's going crazy. Like we have to invest in this. And they were kind of like, oh, but the product's not great, and it's quite funny hearing it from guys about, giving their opinion on jewelry. But it was just quite funny. They couldn't see it, and it was a kind of a moment for me where I was like, wow, I can really add value here, and spot these trends that people miss. And it comes down to diversity in general. If you've got younger people, older people, different backgrounds, ethnicities, they can all spot different investing trends. So it's kind of thinking, you can bring a lot to the table, no matter what your background or your gender. And
absolutely.
Yeah. Sorry, I kind of went off on a tangent a bit.
Oh no, that's such nuggets of gold. Thank you. We might quickly jump in and do a bit of Q&A now.
Okay.
We'll keep the responses quick, short and snappy. But the first one we have here is, I don't know how to or where I can allow my granddaughters to learn about investing here in New Zealand. They're 13 and 11. Do you have any recommendations for tools or tips?
Yeah, well, I guess it probably, because they're still quite young, I would say it probably comes from her and kind of her teaching them the knowledge that she has, if she has the knowledge. It's also asking them, like I said before, like what products are they using? They're a prime example of kind of new trends, new products that are coming in that
finger on the pulse.
Yeah. And so, we've had multiple fathers that I work with here, and their kids are spotting trends, and they're similar ages. So it's kind of maybe helping them out and buying them shares in a company where they actually use the product, and therefore they'd just be a bit more interested, and then you can kind of teach them about why it's going up and why it's going down. And but yeah, in terms of investing, like documentation and information for children, I think
it's probably there maybe at the moment as well.
Is a bit of a gap. Yeah. Just kind of, it's probably just breaking it down and talking more about saving, spending, and retirement, and having kind of, I mean, they're probably a bit old for this, but having jars where you actually put money in and you can see the different ways of spending your money and why it's important is probably the basic level of understanding they need to know first. So yeah.
And just on the tail end of that as well, we do have kids accounts on Sharesies. You can, and as a grandparent, you can set that up. You can set that up as a guardian for any important young person in your life. And that can be a really great way to introduce them. Like you said, like they see trends, they know about companies, they know about Apple. So that's
what my parents bought me some Contact Energy shares when I was about 7 or 8, and I just remember getting these dividend checks in the mail. I didn't know what a dividend was, or I just got this money in the mail, and I was like, this investing stuff is great.
Free money.
It was just. It got my mind thinking about it, and it was only like 1 or 2 shares, but it was still you start to think, okay, well, what is a share in a company, and what it starts those really basic conversations.
Yeah, that's great. So another one for you here, Victoria. How does the approach and your personal experience at Devon compared with Pi Funds in Milford? You probably don't need to go into specific detail there, but maybe.
Well, I guess they're all very different, and it kind of comes down to when I started at Milford, there was 14 of us, and now, gosh, it's probably like over 100 employees. So you can imagine how a business changes with that.
Growth.
And it was a great opportunity. I worked in Auckland, and then I moved to Sydney and worked over there with opening our Sydney office. But their client base was mum and dad investors, like I mentioned earlier, mainly mum and dad investors. And then so was Pi Funds. Pi Funds, I was covering global markets. So again, it was lots of travel, which I loved, and then had COVID, which was a huge learning curve. Nothing I've ever experienced. I don't think anyone has.
I think that was for everybody. Yeah.
In terms of market corrections and dealing with all that, and trying to preserve client capital, it was pretty high stress time in my career. And then with Devon, we have more institutional clients. So a lot of our clients are banks and universities, and kind of, so it's a different, when you have a different client, they require different services from you, I guess. And we still do, it's about 80% wholesale and 20% retail at Devon. So, and I'm back covering Australasia. So they all have their little quirks and differences, but they've all been great teams. Majority of the time I've been, most of the teams I've been one of 2 women, but it's like the nature of the industry. But the teams have been great. The growth in every business has been great, and I think we're really lucky in New Zealand to have such great fund managers, and such a good market here in terms of investing.
Yeah, that's so true. Every job brings its own little thing.
Totally, yeah.
So this one here, so for first-time investor, question, is it to go for shares that have a low value or high value shares, or does it make no difference? So Shelley, this is probably more of like a personal circumstances and personal financial advice. If you do have any like specific questions, you're welcome to write into our customer care team, and they can help you, point you in a direction of like useful articles to help you make your first investment. But maybe, Victoria, is there any tips that you would give to someone starting out investing on like what to look into?
Yeah, I guess in terms of what to look into, I'd say just look around you and what products and trends you're seeing, like I said. But in terms of investing in something, like, should I invest in something that's going up? You've got to ask yourself, why is it going up? And if you're just investing in it because everyone else is investing in it, then when things start to turn, if they do, you kind of don't have anything to fall back on. So it's if you can understand the business and you can see a good outlook in terms of earnings, or you can, my rule of thumb is if I can see a company or investment doubling in 5 years, then that kind of gives me a bit of comfort that it might be 5 years, it might be 3, it might be 10. But, if I can see a good growth opportunity for that company, then I get much more comfort in investing. It might be bumpy along the way, but 9 times out of 10 it probably is. But it just comes down to you really need to understand what you're investing in and whether that's a good investment for you.
Yeah, and I guess it comes down to also like what risk you're comfortable with seeing those bumps go up and down, and also what your goal is as well.
Exactly. Yes. Yeah.
So we've got the next one here. How much do we know to invest, or is it a silly question? I know Sharesies has made this easier for a lot of us, but how do we know how much? This is from Kelly Ann. So,
yeah, that's a question I get asked a lot. And you want to give it a definitive answer, but it does really come down to your personal situation. Like $50 for someone might be a lot, or it might be not much, but it just really depends on what you are willing to lose. I say, because it's investing, it does take risk, and if you're investing all of your money and therefore you have nothing to live off day to day, and then you lose it all, you're going to be in a pretty dire situation. So it's don't invest everything, but just invest what you feel comfortable losing, I guess. Yeah, but like she said, I mean, platforms like yourselves have really allowed people with any amount of investing dollars to have access to it, which is great.
Yeah, that's fantastic. It's really good prompts there. So last one for us today before we round out, and this one I think is for me. It's I can't seem to find an option to add stop loss orders to my holdings. Is it possible? And if not, why not? So at the moment we don't currently offer stop loss, but if it is something you're interested in, please feel free to email in our customer care team at help@sharesies.co.nz and let them know. And that goes for any other feature requests. If you see anything you'd like to be added to Sharesies, please get in touch with our customer care team. But yeah, that's all for us today. Thank you everyone for joining us on your lunch breaks, and a special thanks to Victoria Harris. Thank you so much for your time. There were some absolute nuggets of gold in there.
Good, I hope so.
Really appreciate you coming along and joining us. So we're going to be back here next Thursday as well, and we'll be joined by Christy Godfrey-Billy. She's the CFO of Xero. So Xero is an ASX listed company that offers cloud-based accounting software. Xero has also just recently released their full year 2021 financial results. So it's promising to be quite an interesting lunch money. So you can register through the link that's just been thrown in the chat. And we're really looking forward to seeing you all here next Thursday. Also keep an eye out on Sharesies Share Club. It's in Facebook. Join if you haven't already. And also we can keep in touch with you via our Lunch Money newsletter, which comes out Monday, Wednesdays and Fridays. So thank you, everyone. Enjoy your weekend, and we'll see you next week.